Well, hello, everybody, and thank you for joining this month's Retirement Genius Brainstorm Study Group webinar. I'm your host, Chris Orestes, the president of Retirement Genius. And as always, appreciate you joining us as we explore different topics every month about what is happening in the financial, retirement, aging landscape, information, resources, everything that we can provide and discuss that is helpful to you, helpful to your clients, navigating maybe the most important aspect of their lives, reaching retirement with financial security. And to that end, we released a white paper last month in unison with Medicarians at the annual Medicarians conference entitled Financial Security 2030. And in that paper, we analyzed a number of topics around aging, retirement, the financial, economic, demographic, and political realities that are hitting this country now, and particularly over these critical next 5 years as the population is aging through some critical milestones. It was a real honor to release the paper at Medicarians. We were able to host 3 sessions at the meeting. We did a main stage panel discussion session in front of over 3,000 people, and then a couple of panel breakout sessions, each that had over 100 people attend both. And we really were able, with a cross-section of experts, to drill down into this topic. And it's my pleasure to spend a little bit of time with you today, giving you a synopsis of the study, what we covered, some findings. There's a lot more to the study than what we're going to cover here, but wanted to give you a sampling of some key findings. And for all of you who are part of our study group, we're going to be sending you a copy of the white paper as a follow-up to today's session. So let's get into it, and I think have what I hope will be a very informative overview of what we have put together here. And just to kick things off, Retirement Genius is an information and resource center. We work to help people achieve a well-balanced retirement. We focus on financial, information and resources, health, long-term care, information and resources, and lifestyle. It's our belief you need to bring these together in balance so that people can retire like a genius. So getting into the Financial Security 2030 findings, here were 6 key trends that came out of our research that are really going to have an impact on shaping the future of retirement and financial security that everybody wants as they get to that place where they hope they can retire with security in their life. Starting with an introduction overview, as I said, the next 5 years are going to be a really critical gateway. There's some critical landmarks that are happening in this country from a demographic, economic, and political standpoint. So from now to 2030, it's a real flux period of aging and shifting responsibilities around how we're going to cover the costs of retirement and aging and long-term care, because this aging population, as it's ballooning, it really is going to have a profound impact, and it already is, on the economic and political dynamics driving this country. Increasing longevity in aging, which we're watching, is happening at the same time that savings are dwindling for people, and you've got a higher dependency on entitlement programs, but these entitlement programs are under a lot of stress. They're stressing now more than they ever have, and over the next 5 years, we're looking at some real important financial decisions that are going to need to be made about the future of these programs to keep them viable and sustainable. Demographic, economic, and policy shifts for you as advisors will require you to be able to adjust to new planning strategies. This is not our grandparents' retirement. We are all going into an entirely new world. So, trend one hinges on this aging population. And quite frankly, there's some real workforce dynamics that have a big impact on how things shape up over these coming 5 or so years. Starting with the simple fact that by 2030, the last baby boomers turn 65. So, we've all heard for a long time 10,000 baby boomers a day turn 65 in this country. That's coming to a head. 5 more years of baby boomers turning 65. By the time we hit 2030, all baby boomers have crossed through that doorway. And guess what? Gen X, who the very first Gen Xers started turning 60 this year, they now start turning 65 by 2030. So now you've got the Gen X population starting to move into the retirement category as the baby boomers now are all crossing that threshold. At that point, 1 in 5 Americans are going to be of retirement age. And that has a big impact on healthcare in this country, housing in this country, labor, the workforce is going to be significantly different than what it was 5 years ago and what it is today. That's going to put a lot of strain on public resources, and that we're already seeing it right now. So the future of Social Security, Medicare, Medicaid are squarely in the bullseye of the political world in how that's going to be shaped, funded, who's going to get it, who's not going to get it. You're going to see a real change in that world. And you're going to see more and more people as they retire needing to sort of phase in their retirement and continuing to work into their retirement, which is not entirely a bad thing. Staying engaged with meaningful activity, and if it can generate some money while you're going into retirement, is actually a good thing. A full stop versus a phased in retirement of winding down and shifting from doing what you have to do to maybe doing now what you want to do and making some money while you do it is actually, in today's world, a much healthier retirement than just full stop and living like a 20th century retirement used to look like. But as financial professionals, with all this being said, you're going to need to be working with them to help them balance both their financial security and longevity risk. People are aging and living longer. There's going to be more demand on long-term care resources than ever before. So it isn't just enough to have a investment plan, a saving plan, a retirement plan. If you don't have a longevity risk component into that, that's tantamount to malpractice in retirement planning at this point. You've got to be planning for people's income, tax efficiency, and then benefit coordination across multiple drivers of their retirement. It isn't just your savings, your investments, your assets. It's also entitlement programs into whatever configuration they're going to be looking like. And again, you're going to see more and more people continuing to work now into a good portion of their retirement. Trend two is the savings gap. And this is a problem that gets worse, not better. We still see the majority of Americans are underprepared for retirement. They have not saved enough by the time they've hit their 40s, their 50s, their 60s, where they should be to be able to replace their incomes in retirement. We're living in a world now where pensions are a rarity, savings are low, and workers are expressing more fear, more trepidation, more doubt about their ability to retire with security than ever before. So you as advisors, what are the solutions? Well, it's a diversified, holistic approach to retirement, integrating and maximizing 401ks, IRAs, life insurance and annuities, home equity, and again, longevity planning. You've got to plan for the unique financial challenges that are brought on by aging and declining health. What your retirement looks like at 65 becomes very different by the age of 70, 75, 80, 85. It is not a one-size-fits-all proposition. And so part of that is making sure that you're able to maximize the entitlement element of your planning, knowing when is the right time to take Social Security, knowing what the right Medicare plan is, and being on top of annual open enrollment periods. Is Medicare Advantage plans or traditional Medicare a better option? Those kinds of things have to be part of the factor and can't be ignored and taken for granted and pushed to the side. So it's that holistic approach that really is going to set advisors apart in this shifting dynamic of a marketplace. Trend three, rising healthcare and long-term care costs. By 2030, you're going to see the average cost of healthcare for a couple in the neighborhood of $400,000 in their remaining lifetime. That has to be covered somehow. That's a very expensive hill to have to take once you've reached retirement. And for so many people, they ignore that factor. And then all of a sudden, it's just dropped in their lap. And a big driver of that is long-term care. You know, in the current environment, and it's only going to get tighter, is access and the amount of funding that is available for Medicaid. That is going to tighten. That we're seeing it right now. When in the current House budget proposal, they're looking at taking almost $900 billion of funding out of Medicaid over the next decade. That's basically a 10% cut across the board. And I can tell you that for those that are providing Medicaid services, nursing homes, for example, they cannot afford a 10% cut in reimbursements. For so many practitioners who provide the healthcare services that Medicaid funds, they are working on razor thin margins. So more emphasis than ever before comes on people, on their personal responsibility, and how are you going to handle these things? Paying for yourself, private pay becomes more and more important in the long-term care equation than it ever has been before. So as financial planners, you need to be thinking about, for your clients, if smart use of HSAs, max HSAs out, because as much money as you can get into an HSA, you can carry that into and spend down through your retirement. Making sure you're managing that longevity risk and the exposure to long-term care costs through life insurance, long-term care, short-term care insurance policies. Annuities, hybrid LTC annuity features and options need to be strongly considered. And people, clients, and you as advisors should be educated on Affordable Care Act plans, Medicaid, Medicare options, and limits to what these plans can cover and provide. And then looking at alternative financial vehicles using assets and other tools that people have access to, particularly as they're aging and their health is declining, things like a life settlement, if they own a life insurance policy. As they're aging, as their health is declining, now that life insurance policy potentially has some significant market value that could be tapped into. Accessing a reverse mortgage, accessing veterans benefits. We have millions of veterans out there who are under accessing the benefits that they're entitled to. Long-term care riders, long-term care life hybrid policies. These additional options are going to be critical to help people contend with managing health and long-term care costs. Trend four is the uncertain future of Social Security and Medicare. And now, am I saying that these programs are going to go away? No, they won't, but they are under a lot of stress. Current financial projections show that the Medicare and Social Security trust funds, which funds about a third of the benefits that everybody receives, could be depleted and insolvent within a decade. Without that being addressed, one day you run out of a third of the money that's put away for Social Security and Medicare funds, and you haven't done anything to address that. The only thing you can do is drop everybody's benefits by a third. That would be not just a catastrophe for the people receiving benefits, but a ripple effect across the economy that would be catastrophic. So it has to be addressed. There's going to be, and it's happening as we speak, and it will continue and it will evolve, the political battle over the future of entitlements. How do you shore up these programs? Are there going to be new revenues brought in through taxes? Are there going to be savings found in efficiencies, in raising retirement ages? There's a number of things that are on the table, and that battle, which has been talked about for years, in many ways, really has begun starting this year. So, as advisors for planning with your clients, you want to be also taking into account being strategic about when you're claiming benefits and factoring in spousal benefit as well. You want to optimize your benefits. It isn't one size fits all with Social Security. Every year you wait to take Social Security from when you're first eligible at 62 until you turn 70, your benefit that you will lock in for the rest of your life goes up. A spouse can take benefits based on their spouse, whether they're married, living, or divorced, and you always have to factor that in. More again, reliance on the personal responsibility through annuities, through the use of assets, through savings and investments. And then making sure that you're being tax efficient in your income and your insurance planning. There's a lot of tax efficiency to be found by being strategic about how you're working with your income, assets, investments, insurance. I always say Americans are responsible for paying every dollar of taxes that they're due and not a dollar more. So efficiency, tax efficiency, to pay the required amount and not more than you need to is an important part of preparing for the future and understanding how to navigate Medicare, ACA plans as part of supplementing what's going on with Social Security, Medicare, understanding how to use those programs correctly. Trend 5, evolving retirement income strategies. There's the three-legged stool of the traditional retirement is unstable and, quite frankly, kind of under construction as we speak. Pensions really have been replaced by 401ks and IRAs. Entitlement programs are threatened. People's savings are low. The two biggest asset classes that people own in this country are their homes and their life insurance policies. And so how are you working in a holistic manner to balance your need for liquidity and the realities of longevity risk? Like I said, what your life and financial requirements are going to look like at 65 versus 75, and what that does to your retirement and your resources for retirement is significantly different. As long as possible, people need to be maximizing their 401k and IRA contributions, particularly once you hit 60. You want to supersize those catch-up contributions to as high a level as possible, and even starting at 50 when you get your first chance to step up your contributions. But once you hit 60, step on the gas. Make sure you're putting as much away as possible. Take advantage of that opportunity, but then be mindful of when you get to the point of how you're going to start drawing that down. Once you hit currently the age of 73 for required minimum distributions, you want to have a well thought out withdrawal strategy for tax efficiency and meeting your income need. Alternate income strategies, using things again like reverse mortgages, life settlements, annuities in creative ways, life insurance in creative ways. You want to make sure that that's always factored in. And again, many people are going to keep working through a portion of their retirement and continuing to generate income and making sure that your use of entitlements is strategically woven into this retirement income financial security strategy. Then lastly, trend 6 is the advent of technology, and we've got some regulatory government transformations happening as we speak. I've touched on it, but it's a good place to sort of wrap it up. First, on the technology side, digital tools and particularly AI are allowing for personalized advice and solutions for the consumer. So it's not a one size fits all anymore. You can really customize, personalize what you're doing for an individual through the use of AI and other digital planning tools. And for those of you working with IMOs, BGAs, they are making those kinds of tools available to you. Make sure you're taking advantage of it. And remember, when it comes to AI and digital tools like this, these are not going to replace you, but the agents, the competitors that are using this, if you're not, that's who's going to replace you. And then when it comes to the regulatory environment, there's a realignment happening right now between federal, state, and personal responsibility for the impact of an aging population's financial and healthcare needs. And that, again, is just, it's underway. It's been talked about and researched for years, and it's kind of starting to really happen now. What's happening today may not be what it ends up being, but it has started. So some key points for you as advisors is when it comes to technology, you can use technology like AI for efficiency to help with the quantity of work that you do, but you can use it to fine tune and add the human insight for customizations of solutions. And that's the quality of what you do. So it's able to elevate the quantity and the quality of the work and solutions you're able to provide to your clients. This has also opened the door for more virtual and remote caregiving and solutions, many of which now, things like telemedicine and aging in place at home devices and systems that will be reimbursed by Medicare, Medicaid, and some places covered by private insurance as well. A real shift in who's responsible between federal and state funding of long-term care and Medicaid ACA plans. That's fully happening as we speak. There'll be more emphasis on the use of tax policy to encourage, incentivize retirement savings and investing. And again, how do we address these stressed entitlement programs and the growing demand that is placed on them every day because of this aging population? So in conclusion, retirement now is evolving faster than it ever has before, in many ways driven by these major demographic, economic, and political shifts. That's really what's reshaping the retirement landscape. And the U.S. is approaching some, as I pointed out, some very critical milestones of demographic, economic, and political influence as we reach 2030 with an aging population, all boomers crossing over to the age of 65, Gen X starting to turn 65. And by 2034, this country will have more seniors than it does children. We are an aging population. That means there will be less workers and less tax dollars to help support more aging people looking for the programs they need to sustain their financial and healthcare needs in retirement. Aging Americans themselves need to stay informed, need to be adaptable, and need to be proactive. And quite frankly, you do too as advisors. Financial security in later life really depends now on a more holistic approach to planning. If you're a life agent, you should be able to work with annuities and long-term care and Medicare. If you're a Medicare agent, you should be able to work with those programs. If you're not licensed in them, you should have partnerships where you've created a team approach to be able to solve people's equations. Agents and advisors in this environment have to move on from being salespeople selling their product to trusted advisors, solution providers that can take on the holistic approach to what is required to create financial security going forward into 2030. And you, as financial professionals who take it that way, will play a very critical role in building and guiding your clients to the financial security that everyone deserves, everyone wants, but not everybody prepares for. And for so many people, they don't even know what they don't know. And that's where you come in. So these 6 trends are going to be very critical in shaping the financial strategies that you're going to deploy through 2030 and, quite frankly, beyond. So I want to thank you all for joining today's Retirement Genius Brainstorm Study Group webinar. As always, as your host, Chris Orestes, President of Retirement Genius. It's a pleasure to be able to spend this time with you every month. Encourage you to visit our website, retirementgenius.com, our advisor's website, advisors.retirementgenius.com. And remember, we have podcasts out there where we're constantly in the media talking to the media about these issues. We have videos on our YouTube channel. Go onto YouTube, look up Retirement Genius. There's a whole bunch of educational videos posted there. We welcome you to dig into our resources. We want to work with you. We're going to follow up with each of you that joined us today, registered for today's session, all our study group participants. We truly appreciate you working with us, and we look forward to connecting with you to follow up the study. We'll get you a copy of it, a recording of today's session, and we can't wait to see you next month when we take on next month's study group topic. Take care all. Thank you so much.